some music in the background or something. How you guys doing tonight? Look at this, just getting started. All righty. Mamas, how you doing tonight? Nice to see you again. Secretariat, you're here too. How you doing? Who else do we got? Mark Dunn. How's it going there, Mark? That guy Willa. How you doing, that guy Willa? Golf first. I'd love to be able to play golf, but I just can't do it. Rosa Arlett. Rosa Allen. Old dogs in the house. How's it going there, man? The day is just getting started. Well, here at least anyway. Let's see if we can get that 2.5 hours in. All right, so we can't actually be in only 24. Hey, Beebly Weekly. Hi, James. Joined my first Zoom meeting this morning. Cool beans. What'd you think? Was I missing anything? Becca Makawa. Craig David. How's the clavicle? Yeah, it's freaking huge knot. Hey, Doc, what's happening? You got this big, huge clump of calcium. That's what you said, Doc. Big, huge clump. Oh, man, didn't happen last time I broke one. It was great, thanks. I haven't made a trade yet, but definitely learning. Well, that's what we're here for. We're here to learn. I'm here to teach. You guys are here to absorb. But maybe some of it will work for some of you guys. Okay, some of the guys in the audience, they are in my morning trading group. Some of the other guys, they just keep doing the trades and following over and over and over again. Because now I don't plan on really going anywhere. I'm creating a legacy that my children will never measure up to. More likes can attract more viewers. Well, you guys know the drill. More likes can attract more viewers. Because at some point in time, my children or my grandchildren are going to bitch, moan, and complain about something. And I'll say, go back and check the archives. I was on every single night for 2.5 nights for a whole year to build this company. So that's my excuse to my grandchildren. See how it goes. So I'm into we're into almost the end of May, and I've only missed 2 days. Okay, so just 2 days. I didn't really miss them because I did sign in and tell you that I wasn't going to be in. One, because I was sick as a dog, and the other one because I had to take the wife to the hospital. So, that being said, let's get the ball rolling. All right, so let's talk about some of the stuff we've done today. Today we looked at a few interesting ones. This morning we talked about in the trading group. Intel was one of them. INEC. And you want to hear something funny? Is Starbucks. Okay, Starbucks. Remember we saw. Well, look at Starbucks first. Okay, let's take a quick look at Starbucks because everybody loves Starbucks. There's a Starbucks in every major city in the United States. So why not Starbucks? Okay, so as the company continues to increase their dividends, Integrity 3D printing. I've never traded yet. New at all of this. I'm set up to go. Cool beans. Well, thanks for joining. All right, so as I was saying, Starbucks. Now we talked about for the past couple of weeks. All right, we've seen it go from. Let's just go over the numbers first, just to because I already own Starbucks, so I might as well go into it. And a few other people have been asking questions about Starbucks a couple times a week, and it was just a perfect candidate for this scenario. So let's take a look at the numbers first, because with me, it's all about the numbers, because numbers don't lie. I want 1% per week. That's my goal. That's my focus. So for those guys who want to follow, fine. That's my goal. That's my focus. See how long I can keep this going on. Now, just to let you know, there's 22 other people pretending to be me, so make sure you get the right person. Secondly, I'm cross-pollinating. What does that mean? Well, I got YouTube, TikTok, Facebook, Instagram, and then I'm going to pick up on X and Rumble, and then a couple of other lower ones. So if and when I get canceled on one place, find me on one of the other places. Okay? So I'm trying to cross-pollinate all different social media things. And I find it easy with just the phones, because I got, 4 phones now, and I got a couple phones on order. I'm just turning the phone on and hit record. It's so much easier than trying to figure out the damn software. Really? Okay? So anyway, also, for those who are just joining, this screen right here, okay, this screen you're seeing is live on YouTube, on the 10-Minute Trader on YouTube. You'll see there are 2 live events at the moment on YouTube. One, which is basically what you're looking at, me standing in front of the screen, and the other live one is just the screen itself. You can hear me in the background, but you just hear, just seeing the screen. That way you can be able to see all the numbers. Okay, so here's the numbers that we look at on a normal, everyday basis. The open, the high, the low, the last, the bid, the ask, the change, the volume. Those numbers right there. Anytime you're buying stock, you have to buy it at a certain number. Okay, whatever that is, and it fluctuates. It does. If you think you're going to just jump in and just, leisurely, especially as a newbie, if you think you just come in, jump in and leisurely buy something and not be mesmerized by how fast the numbers are moving. Like, wait a minute, if I wait a little bit longer, it go up a little bit higher. Oh, wait, if I did, no, I don't do that anymore. I used to, so I know what it's like. So being a new person, get over it quick. Just decide what it is you want to buy. Okay, the number is whatever the number is, and it's going to change every couple of seconds. Just hit it, quit it, move on. That's just my humble opinion. If you're going to quibble over a few pennies here and there, you're going to lose in the long run. Okay, that guy Willa. They need to do something about fake accounts. It's getting ridiculous. I can't help you out with that. What I can help you out is I tell anyone, you want to talk to me, send me a phone number in the DM, I will call you and actually have a conversation with you. I love talking to people. I'm at that point in my life where I felt compelled to share what I know. Dragging kids along with it, see if they want to join in the craziness I'm about to stew upon the world. Anyway, hey, James Day here from South Bradenton. Ooh, I'm in Sarasota, North Sarasota. BlockDAG network needs to truly be looked into. Massive opportunity to go from 5 cents to $9. Okay, dude, you're definitely in the wrong conversation. So let's get rid of our first block of the night. Eliminate our first person. I don't do that kind of stuff. Sorry, guys. I'm strictly consistent, predictable, slow, boring, whatever you want to call it. If you can think of the absolute worst stocks to get into that do absolutely nothing, those are the ones I want. Why? Because they're steady, they're predictable, and I can gain 1% every week from them. Uh-oh, we're only at 54. The rules go, we go below 50, we have to reboot. All right, so reboot, get some more viewers in. Don't go anywhere. All right, we'll try rebooting this again to see if we can get some more viewers. 54? Really? That was silly. Mama's is back. Black Acre. Weebly. Eating some blueberries. All right, Anna, let's get started. What we're looking at, Starbucks. I want to talk about Starbucks for a little bit. If we jump to the Starbucks tomorrow, 80.64, what we can pay. The 81 is going for 60 cents, but that's only for 2 days left, Thursday and Friday. That's it. Let's take a look at next week. The 81 next week, $1. So that's over 1%. So Starbucks looks good for next week. Okay. Tia Marie, how you doing? Gray Reynolds, thanks for joining. Alfred, you too. All right. So as we're looking at Starbucks, look at the price, 80.64. Okay. Now this week's remaining time value, which is Thursday and Friday, is not very much left, so you might as well skip that and go right to next week. Next week it's paying over $1, which is over 1%. Okay, fine. So let's see what the chart looks like, and then we're going to talk a little bit more about it because I've had Starbucks for the past couple of weeks, and I like to, explain why I buy them and what I'm looking for. Yes, even the failures, when I go wrong, I admit it, and I tell people what I did wrong. Okay, so let's look at the last. All right, the whole thing. Here we go. He opened up last year at 104. He had a high of the year at the middle of November at 107.58. She drops down to a bottom of 71.88, and that was, 2 weeks ago? Look at the last 90 days.
Okay, so for the last 90 days, look at what we're looking at. Starbucks is up here at the high of the time frame. She comes down and then she drops and finds its new bottom right there. But look what happened since the drop. Because we all panicked. I remember when we were looking at this. Because I looked at it back here in the beginning of April. So I'm looking at it in April and said, okay, fine, everything looks great. Right here is where my signal to jump in. So I jumped in. 2 days later, she drops. So I bought some at 88. Now she's at 70. Well, she dropped down to below 74. Now she's at 80. Okay, so when she dropped down here, I waited to find the bottom, two up days. Then I jumped in. So I doubled down, like dollar cost averaging. So if I owned a couple hundred shares at 88, I'd buy a couple hundred more shares at 74. Drops my price down to 82. Okay, my average price. So what happened? Well, in one account went to the dividend capturing something totally different. Okay, that got kicked today. Okay, so this morning it jumped up a little over 2%. So I said, oh, I'm going to take it. So I took it. I jumped back in. Well, it kept on going up. So I said, all right, well, I still like it. So I'll take that profit, lock it up. So then I bought some more back. So I buy a couple, sold them, buy a couple. Anyway, that being said, I was going to take the profit for the second time this afternoon because she's still from the morning to the afternoon. It was up 2.5%. Sorry, I'll take 2.5%. Why not? So by afternoon, I jumped in again at Starbucks. By the end of the day, it's at another 1.75%. I'm thinking, yeah, but this is, if you do this, you're going to be deemed a what do you call it? A day trader, and you need to put more money in your account. I'm thinking to myself, I get 6 accounts, and this is just a little one I'm playing with, and they want me to. Anyway. Oh, so needless to say, yeah, I bought some Starbucks today. But let's take a look at it, though, because it's really interesting. Okay, we have our 90-day high up here. You can't really argue with the numbers, because the numbers are what the numbers are. Comes down here. Let's see the last 30 days. Okay, so look at the last 30 days. Now, this is the part that I want to look at the most. Why? Well, because it gives me a good idea where is it going to be on Friday. Okay, not only that, what direction is it going next week? Why is that important to me? Well, because if I like it, I like Starbucks. Okay, it's not a company that you haven't heard of. You very rarely hear me talk about me personally buying something that you haven't heard of. Okay, unlike some of the stuff you guys rattle off. Do I invest in Rivian? No, I don't, because they don't have dividends that can continuously increase. Yeah, yeah, steamroll or pattern day trading. What exactly is pattern day trading? Okay, so stock goes down, you see an opportunity to jump in, it goes up. Why? He's bitching. All right. All right, so back to what we're talking about. Here's the last 30 days. You get your high on the 26th. Okay, a couple of days later, she gaps down from 80. Now, this is where I jumped in. I jumped in at 88. All right. Did I know the very next day it was going to drop down to 72? No, I didn't know that. Do we ever know when something like that's going to happen? No. Okay, did I panic? No. I was a little peeved because, here I got my cool little strategy and it's all going fine, and all of a sudden, big old fat black swan shows up. Okay, deal with it. Remember rule number 1, never buy something you don't want to own. I have no problem owning Starbucks. Okay, I just want them to drop off the little tip on the doorstep as they're leaving. 1%, remember, my goal, 1% per week. So whatever you have in mind, if you have 50,000, 1% is $500. If you have 100,000, 1% is $1,000, and that's per week. Okay, so you take the whole account, whatever your account is, and think 1% per week. That's over 50% per year. You could basically double your money every 16 months because of the compounding factor. That's unheard of. So anyway, I like Starbucks. I do. There's one in every major city. I don't see Americans giving up their coffee anytime soon. Okay? This math is crazy. 1% is 1%, dude. I like using round, easy numbers. Because remember, when I created this trading strategy for my daughter when she was 9, I had 5 criteria I need to meet. The very first one is it had to be simple. It had to be simple. Okay? It had to be simple, predictable, consistent, no way to lose, and there was another one. I forget what it was. But that's where we get. I do 0.25%. Okay.
just one in every major city. Yeah, no. So some major cities have more than one Starbucks. But you know what I'm talking about, okay? Me personally, when I talk about my personal accounts, you will hear me say companies that you have heard of. Now, IGT, I've never heard of that. Okay, now, I would like to, if there was a possibility of a place thing, you want to put up something that
Makes no sense whatsoever. IGT.
is that right?
Yeah, IGT. I'm not done yet, so I'm just pulling this information up. So I like it when people label stuff, put it up, say, oh, this is a good one. Well,
I do have to admit one thing. They do have dividends, and they have been paying dividends for more than 20 years. But here's the thing with their dividends. By the way, to those guys who don't know, this screen here behind me, if you can't see all these numbers and all this fine print, it's live on YouTube. So you can actually see my screen, the screen behind me, on YouTube. So YouTube, that's mntrade.com, and you'll be able to see the screen. Okay?
all right, so as I'm looking at it, 1993, they're paying a 1 cent dividend. But look at it, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, wow. Okay, so that's from 93 to 99.
From 93 to 99, they didn't raise
Their dividends at all. 2000, look, nothing nothing in 2020. Oh, we have nothing in 2000, nothing in 2001, nothing in 2002. What, they just skip those years? 3, 4, 5. And the dividend's not rising significantly. 7, 8, 9, 10, 11, 12. Yeah, the dividends is really slow to rise. Now, 2015, they're offering 20-cent dividend. Now look, 1, 2, 3, 4, 5, 6, 7. That's like 1, 2, 3. How many freaking years is that?
That's a couple of years. They haven't raised their dividend. They're not consistent with their dividend increasing. Okay, yeah, they've been paying dividends for over 20 years. Like they skipped a couple of years, but they don't increase consistently. What's your handle on YouTube? The 10-minute trader. Hey, Miss Marie, how you doing this evening? Okay, so you see what I'm talking about? I want when somebody suggests a stock for me to take a look at. Now this, I have no idea who suggested this one.
But let's say another issue I'm having with it.
All right, here's the second issue I'm having with this company. Okay, first of all, this is called dividends for cash flow. Okay, dividends for weekly cash flow. So how can you? How did I break my arm? I was playing soccer. Yes, I do play soccer still. All right. Anyway, what am I looking at? Second reason why I don't like this company. Just me though. Okay. If I buy it tomorrow morning, 2075, the 21 is going for 35 cents, which is over 1%, which is what we look for. That's great. That's awesome. But how much over 1%? Let's take a look. Open the calculator. I'm bringing in 35 cents. And what is it costing me? It's costing me $20.75. $20.75. And that's going to equal to, look at that, 1.68%. Okay, that's the calculator. There's the numbers. I'm reading the numbers right here. This is what I can buy it for tomorrow. This is what I can sell the covered call for tomorrow. Okay, so that money goes into my account immediately. 1.68%. Cool. But what don't I like about it? Well, I'm getting 1.68%, and I got to hold it for 30 days. Well, 30 days doesn't sound that long, but how many weeks is that? That's 5 weeks. Not really 5 weeks, but it's 4 weeks is 28 days. And you need a complete week to go from 1 week to the next. Okay, so it's Monday through Friday, Monday through Friday. When you catch Thursday or Tuesday, it's still a week.
Anyway, so I have total for 5 weeks, which means I'm getting 1.68% divided by 5. So I'm getting 1/3 of a percent doing monthlies. That's why I don't do monthlies. Okay, number one, they don't consistently increase their dividends every single year. That's number one. Number two, they only have monthlies available. A monthly is going to give me 1/3 of a percent per year. Now, what does 1/3 of a percent per week come to? Multiply by 52 weeks. That gives me a grand total of, okay, so it's not that bad. 17.5%. Okay, you like the company, IGT. It's paying out what it's paying out. If I was going to do a covered call, and I didn't even look at the charts, regardless of what the charts said. This is just the numbers part. Okay, so why look at all those charts if the numbers don't work? Okay, does that make sense? Because I want to make sure anytime I buy something, I want to buy it as if it was a stranger trying to figure out what they're doing. It's like, does it make sense? Well, buying this company, buying Starbucks, doesn't make sense. Why? Well, because they got a Starbucks in every major city of the United States. Do they have one of these companies in every city in the United States? No. And they don't have weekly options. It is what it is. Let's move on to the next one. MKC. Really? MKC? Okay. MKC. McCormick. Ooh, that's a good pick. Now, McCormick's a good pick. Why? Well, they've been in business for over 100 years. But they have monthlies. Monthlies, I can only do it once per month, which means only 12 dividend plays per year. 12 dividend plays, even at 1 or 2%, is not enough for me. What about Rivian? Rivian doesn't have dividends, dude. Sorry. And if they do, they haven't been increasing for 20 years or more because the company's not old enough for that. Sorry. Isn't it RVN? For Rivian, RVN. Nope. RVN is Reverence. Reverence Therapeutic. ECC. Gotcha. Bumblebee? Okay. ECC. Eagle Point Credit has no options. So it's going to be a no. Okay, so we do, really, you want to take a look at Coca-Cola's a no. They have terrible premiums, never got over 0.5% with Coca-Cola. Target, oh, Julie. Coles for next week looks good. Is it too early to get in? Well, let's take a look at it. How you feeling about Starbucks? Oh, dude, we looked at Starbucks like 5 minutes ago. Seriously. I personally have Starbucks. Starbucks is good. Emblem. Is that right? Emblem. Okay, interesting. Emblem. O is a no. Main is a no. Both when they don't have weekly. I don't think they have weekly option dividends. One or the other. They're no. Does Ferrari have a stock? I think it's race. Could be. Tea? Ooh, Campbell Soup. Any thoughts on SPC, PLD? So Starbucks is good. All right, Mr. Denver, let's take a look at Starbucks again. I like Starbucks. Okay? Gee, John Deere's a little pricey for me. I like to stay under $250. It makes it easier for people just getting started. Glad you think so. I think Starbucks is definitely, well, of course they'll recover. Did we even finish going over Starbucks? No, I don't remember we are. Don't you like it when you got some nice, prescription medication that makes you forget things? Those painkillers. Anyway, Starbuckies. Okay, we looked at the numbers for next week. The numbers look fine for next week. That's just the numbers. That's only part of the equation. The other part of the equation is, what is the chart telling us? Now, it's not like any mystical crystal ball shit or anything like that. It's just what's the high, what's the low. We'll look at the 1 year chart. This is 1 year. Okay, what's the high of the year? What's the low of the year? Where was it a year ago? And where is it right now? That's the first thing I want to look at on the 1 year chart. Gallant, Nike, and EL. I'll write those down. Gallant, definitely look at both of these yesterday. Ooh, by the way, I did buy some Estee Lauder this morning. I was taking a look at it. It looks okay. Rivian, no. I'm just wondering about the stock called Rivian. All right, first of all, user 22295255383, whatever. I need a stock symbol, number one. Okay, Rivian, you expect me to know the. Now, normally, if you tell me a good company, I will know the stock symbol. For a company I don't look at, and I never would look at, and doesn't fit anything in my criteria whatsoever, I don't know. Because why concentrate on something that has no relevance to me whatsoever? Okay, Rivian doesn't have 20 years of increased dividends. Once it does, maybe I'll look at it then. But until then, it's no. All right, so let's get back to where we were. We're talking about Starbucks. And I was talking about something a second ago, and I forgot. All right. Starbucks. Back to Starbucks again. I can buy it tomorrow morning, 80.64. They sell someone the rights to buy it from me either this week, like 60 cents this week. Okay, it's not 1%, but I'm going to do it for next week also. So why not collect the 60 cents for this week, what's left of the week, it's 2 days, and then hold it over to next week. I mean, if you make it and you make your money, hey, fine. You know, it's not that big a deal. But if you carry it into next week at 81, say if you sell it at 81 and it goes above 81 by Friday, which it very well could do because it's at 80.72 at the moment. You know, so it's on its way. It's bouncing off of a bottom, and it's filling in a gap, which gaps have a tendency to fill. So let's take a closer look at it. Okay, so over here you understand what I mean. Okay, buy the stock at whatever the price is first thing in the morning. So the closest strike price would be the 81. Collect 60 cents this year. So if the stock's over 81 by Friday, you get that 60 cents as a profit. And if it's over, you get an additional 36 cents because your purchase price is 80.64 and the sell price is 81. So you get the 36 plus that, that's over 90, which is over 1%. But, excuse me. But if you sell the 81s and it's below 81 by the end of the week, which is fine, you'll carry it into next week and you'll sell the 81 next week. And then you just keep bringing money over and over and over again. And if you do the 81, your chances of getting your 1% are okay. But if not, we'll take it into next week, and then next week you'll be able to do the exact same thing and bring in another 1%. And Starbucks has, I don't even know when they have the dividend coming out. Let's find out. SBUX. May 16th. Hey, you know what May 16th was? Last week. All right, so they paid out their dividend last week. And they went up. Okay, so they paid their dividend last week on the 16th. Right here. May 24th. Last Thursday. So we missed the dividend on that one. But that's okay because I already owned it a couple of weeks ago. So I did cut dividends on half of mine. The other half I didn't because I picked them up. I think it was just a couple of days ago. No, wait a minute. I picked them up last week. I have no freaking idea. I only pay attention to that when it's time to pay attention to that. TikTok, you want to look at Eli Lilly, huh? L-L-Y. Eli Lilly. BNED. I've never heard of BNED. BNED. Wow. I want to use it in my what the hell are you thinking videos. I'm looking for videos. I'm looking for companies that I can put into my video. My new video series is going to be WTF You Thinking. What the fuck were you thinking when you bought that? That's just my opinion. You know, that's just my take on it. Starbucks, rhyme and reason. We have millions of customers buying Starbucks every single morning. It's the Starbucks in every major city in the United States. Okay? It's a no-name brand. Everybody knows who they are. We're not giving up our coffee. Apparently. We're not giving up our coffee. We're not giving up our guns. Whoa. Whatever. Don't get me started. All right, so Starbucks. Let's zoom on in to the chart so you get a better understanding of why I jumped into it. All right, here's our high of the year back in November. Okay, the high of the year back in November last year, slowly coming down to a bottom of the year. Now, a lot of people don't like watching their stock go from up here down to here, but I love it. Why? Why do I love it? Well, number one, there can only be one high of the time frame. Way the hell over there. There can only be one bottom of the time frame. So as it's coming down, it's a great stock. It's in my portfolio. So I take a look at it when the dividend is coming. So now I looked at this a couple of weeks ago before the dividend, okay, because I wanted to catch the dividend. All right, so fine. So I jumped in on it right about here at 88. And then she dropped and kept dropping and then came to the bottom of the year. Okay, fine. But I still collected the dividend and I still collected over 1% every week that I've had it so far. So here we are now, and as she hit here, remember, I like the bottom, 2 days to the upside, then I jump in. So I jumped in, and I dollar cost averaged down on my Starbucks. So I went from 88 to I think it was 74, which brought my dollar cost average right on 82.50, which is cool because I can sell those monies here. But I do have Starbucks in I think 3 different accounts, 2 different trading strategies. Oh, so let's look at the last 30 days. Yeah, we did talk about this last 30 days. Here's your 30-day high. See, every time you change the chart, you change the dynamics. Here's the high. There's only be one high, and then here's the bottom. There can only be one bottom. So once you go from a high to a bottom, 2 days to the upside, that's when I jump in. That's me. But I only do certain stocks at a certain time of year, and that's right around when you pay their dividend. Why? Well, because I'd like to catch the dividend. If it's a good company that's been paying dividends for more than 20 consecutive years, well, they're pretty much going to continue doing it. Okay? If you're doing something right, you might as well keep doing it. That's why Coca-Cola is still making Coca-Cola, Pepsi. They're still doing that thing. Wells Fargo, Bank of America, all those over 100 years old. General Electric, over 100 years old. Consolidated Edison, over 200 years old. Still producing a good, decent product. So people keep buying it. So I look for this pattern. And it's really not that difficult because I only look for this pattern when this occurs. And I don't want to make it sound like any hooky or any crap like that. Because it's not. It's the basics. Okay, you look at companies that consistently pay out dividends. What does that mean? That means they're continuously profitable, that's number one. And if they're continuously profitable and they continuously increase their dividends every single year, okay, there's 54 Dividend Kings, 50 years or more of increased dividends. Dividend Aristocrats, I think it's 67 companies that increased for 25 years or more. Then you get the Dividend Champions, I think it's 97, I think. Oh, no, wait a minute, it's 150. 150 companies that have increased for 25 years or more. Just those 3 lists, Dividend Kings, Dividend Champions, Dividend Aristocrats. That's almost 150 companies. Good quality companies that continuously increase. So why do I want to look at anything else? I'm retired. I live off of what I make in my little nest egg. Okay, I don't make any money. If you think I'm making money from TikTok, you're freaking crazy. Seriously, I'll actually show you the numbers. I'll be on for 3 hours and I'll get like 35 cents. Oh yeah, hey. But that's not the reason why I'm doing it. I'm doing it to create, what do you call it? Historical documents. I don't know if you remember the movie Galaxy Quest. The historical documents. Oh, they never got off the island. Those poor people. We're talking about Gilligan's Island. These aliens are watching historical documents. Now, anyway, I'm creating a video log, okay, for my grandchildren. So then when they say, oh, what did Grandpa do? How did Grandpa build this? And this is how Grandpa built it. So this is part of the video log. Just the beginning. That's the January. So January is the very beginning. We're taking you guys along for the ride. Now, some of you guys have been here since January for the whole trip. So you're going to see how this progresses over the years, starting from ground zero. Okay, so ground zero was one phone and a bunch of TikTok messages. So I do have them saved for prosperity. So when my grandson gets older, he's ready to take over. He'll be able to see how Grandpa did it, how Papa G did it when we first got started, which is right now. Not that I've that are new at this. I've been doing this for over 20 years. It's just started videotaping, video logging it as of now. Well, 12 years ago. Anyway, the new live interactive. That's it, the new live interactive one. I'm actually going to start a YouTube channel as soon as I figure out how to use the damn software. Because right now, the YouTube channel, the only thing they're saying is this, you know, on the big screen. Okay, so why did I bring up this screen? Okay, I isolate the companies out of the stock market. Now, there's 9,516 companies in the stock market that you can choose from. Half of them share their profits, okay, with dividends. Okay, those companies share their profits. Okay? The other half do not share their profits. They're looking for capital appreciation, stock value appreciation. So they keep taking all the profits and put it back into the company. So it grows. So what do you get? Well, you get the hopeful, futuristic increase in valuation. All right, sorry, that doesn't work for me at this point in my life. Sorry. So I look at the companies that pay dividends. I take the top ones, okay? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those are the 5 major lists that I look at. I weed out the ones that don't have weekly options, because if they don't have weekly options, it's not going to give me a weekly paycheck. And that's what I'm here for. I'm here to manipulate the system so that I can get a safe, predictable, consistent 1%. It's not really a manipulation system, but in the weekly options, every one of these green dots right here represents a company that has the weekly option. Okay, now, Kinder Morgan, Intel, Ford, IBM, Siri, Wells Fargo, Pfizer, PPG, Walmart, Apple, Capital One Finance, UPS, US Steel, Citibank. Hey, have I named a single one that you've never heard of? Probably not. Let me go up some more. Johnson & Johnson, Walgreens, Aflac, ExxonMobil, Target, Kroger, Archer Daniels, Visa, Hershey's, British Petroleum, Chevron. You've heard of all these companies. Why aren't these in your portfolio? Okay, I look at them, okay, every 90 days. Okay, every 90 days, and it's 4 weeks and a quarter, okay? Sorry, there's 4 quarters in the year, January, February, March. That's 1 quarter. Citigroup is going to pay a dividend every 90 days, every quarter. So if I buy Citibank, I collect its dividend, or I collect a premium coming up into it through a covered call. It's a little complicated, but it's not real. But if I do that every 90 days, well, I'm getting the dividend from this company. Then I can get the dividend from this company. I can get the dividend, if I do it once a week, every single week, I can get a dividend from each one of them, well, from 1 company a week. Or if you have enough money, you can get it from 2 companies per week. But they consistently pay dividends, increasing for more than 20 consecutive years. So why aren't they in your portfolio? You've heard of 3M, you've heard of Baxter, eBay, Corning. Most of you probably heard of Corning, but I grew up with Corning. It's a certain bakeware that was big in the 60s and 70s. And they're still making it nowadays, as far as I recall. They're still trading. Whoops, that's not what I wanted to do. All right, so after I isolate, when I'm going to look at the stock based on when they pay the dividends. Why? Because the dividend is a precursor or a beacon or light or an indicator, whatever you want to call it. It's kind of like a flag saying, hey, look at me, look at me. Okay, I'm paying out a dividend on this date. Okay, great. If I want to take advantage of that, I want to buy it 2 weeks before. Buy it 2 weeks before the dividend, the stock has a tendency to go up. When the stock has a tendency to go up, I buy it, I sell a covered call at the money, which means if the stock moves, I make my money. If the stock doesn't move, I make my money. If the stock even comes down a little bit, I still make money. Oh, well, why the hell doesn't everyone do that? Well, because a lot of people don't know about it. That's why you're here. Some people are new, and some people have been here. But that's basically it. When the stock pops up, all right, I take a look. Okay, when the stock pops up on the calendar, Monday through Friday, okay, I take a look at the whole week, all these companies, Intel, Ford, IBM, Wells Fargo, Walmart, Pfizer, PPG. I look at just those. I don't look at these, I don't look at those, I don't look at anything else except for what is on the list for this week and this week only. It's really not that difficult. Okay, look at this, the first week. 2 major companies, Kinder Morgan, Citigroup. Now, this is just one list. I have like 6 or 7 lists, so don't worry if you're thinking, wait a minute, there's not enough. There's plenty. Trust me. There's over 300 companies, 300 companies have to pay out a dividend within 66 trading days. 66 days for 300 companies. 300, okay, have more than 20 years of increased dividends. 300, so you throw it into the calendar, and it's, all right, this week I'm looking at this. All right, next week I'm looking at that. Don't worry about all this crap. All that doesn't mean anything. The only thing that matters is here and now. Okay, Monday, what am I looking at? Kinder Morgan, Citigroup. Okay, well, how many can I buy? I only carry 5 positions in most accounts. Okay, so it's 20%, 20%, 20%, 20%, 20%. Why? Well, because I like all of them. So I put 20% into here, Kinder Morgan. Hits my target. Now what am I going to do with it? All right, I'll put that same 20% into this one. It hits my target. What do? Well, I do this one. What if it doesn't hit my target? Well, I like the company anyway, so that's why I'm buying it. Rule number 1, never buy something you don't want to own long term, because you just might. Now, Target, I carried Target for 6 months last year, the longest I've ever carried any stock. Now, I've been invested for over 20 years. You can actually see the video. You want to see something funny? Some of you will get a kick out of this. Oops. You can go to that 10-minute traders, my website. Wrong one, wrong page. Wrong page. This one right here. All right, come all the way down. Come over here to the YouTube channel. All right, so that was my website, that10minutetrade.com. Inside of it, you see halfway down a bunch of buttons. Goes to all my social media, YouTube, Twitter, Facebook, Instagram, all that kind of stuff. Okay, so that 10-minute trade. This is my YouTube. Look at this. I got 2 live ones right now. Okay, this one's live, which is just the screen, and this one's live, which is the phone, which looks exactly like the screen you're looking at now. Okay, so what I want to look at is I want to look at videos, and then go to oldest. Okay, now I have some older than this, but they're private.
List number 1 is stocks that are paying out each year, and then list number 2 is a list of stocks that pay out twice a year. List number 3 is a...
That's 12. There's me. And this video here, basically doing the exact same thing I'm doing now, except for now, I got a nice big monitor behind me. But in those days, I had a big old whiteboard that I had to write down in marker. And then every week it changed, so I had to do it every week. And then I had to do the math the long way too. It was paying my dues, so to speak. So now I can stand here in front of you and do this. Right? This is me 12, 13, 14 years ago. I forget what it was. But just to let you know, I have been doing this for quite a while. That's because someone put a camera in front of me back then. I said, all right, let's do this. So I uploaded to YouTube. That's all I ever did. And then we just started up with TikTok last year. So this is so much easier. So much easier. So that's why I did that. Eli Lilly, well, I missed all these questions. Apparently, you can save on capital gains tax if you hold more than a year as well. Yeah, Mark, I'm going to disagree with you there, buddy. Now, anybody, well, any one of you guys, I'm going to go back and see some of these questions. What's the name of your site? The10minutetrader.com. YouTube, The10minutetrader. I missed a lot of these questions. TikTok kept getting me out of your live. I tried to join 3 times. Oh, hi, Gabby. How are you? Only thing I know is people with income below 40,000 a year can buy and sell stock without any gains. Interesting. Dow, we took a look at Dow. I tune in. Okay, thanks. Refine, blah, blah, blah. What are we looking at? Can we do UPS? Damn. Okay, anyway. I missed all these questions. I'm sorry, guys. Mark Gomes. I've been holding VOO, VTI, Apple, and others for a good while. Okay, so my question to you, can I pick on you for a little bit, Mark? Don't feel bad. Because one of the reasons why I'm doing this is because I feel bad for people that got suckered into buying crap. Let's look at VOO for a second. All right, let's get out of here. VOO. Don't go anywhere. I'm just picking up VOO so I can pick on Mark for a little bit. Mark, don't feel bad. You just happen to be the one. you're just the one who put it up there. But don't get me wrong. A lot of people have mentioned VOO a lot. Okay? All right? A lot of people mention VOO, SCHD, VTI. A lot of these ETFs are supposed to be wonderful ETFs. Okay, great. Let's take a look at VOO. Number one, it's out of my price range. Not really out of my price range, but for what I like to do, I find it hard for the numbers to work and justify on a $488 stock. Okay, I like to stay below 250. They're easier to get in and out of, a lot more liquidity, and it's just so much easier. 3.2 million shares today. Okay, so anyway, Vanguard S&P 500 ETF. Okay, great. It's going for 488. So if I want to do a covered call on this ETF, I can only do it 12 times a year. Okay, number one, because it has monthlies. It doesn't offer weekly options. So I don't know if they pay a monthly dividend or not. I'm not 100% sure. We'll take a look at it in a second. But at VOO, all right, it's going to be 488. The closest they're going to come to is the 490s, and it's giving me $5, which is over 1%. Okay, great. But I can only do that once per month. Okay? Once per month, and it expires in 30 days. So what's 30 days from today? That's 5 weeks. Okay, you might say it's 4 weeks, but no, 4 weeks is 28 days. And this expires in 30 days, so you have to hold it another week. So you have to hold it for 5 weeks. So 488, so the 485s get $8. That's a nice, well over 1%. You can sell the 490s, get well over 1%. Okay, fine, great, dandy. But let's find out that exact number so we can actually find out that exact number. Okay, so if my profit, if I buy it at 488, sell someone the right to buy it from me at 490, I can pick up an extra $1.86, another $1.86 on top of the $5. Okay, well, let's throw it in there because it's possible, $1.86. So we're going to add a $1.86 to the 5, that'd be $6.86. $6.86. Because that's my potential profit if the stock is above, if the ETF is above 490 in 30 days. Because that's when it expires in 30 days. We haven't even looked at the chart yet. So we'll give an idea where do we think it's going to go in the next 30 days after we do the numbers. But we probably won't even get to the chart because the number is going to be so crappy. How do I know? Well, because I've been doing it for a while. All right, so hypothetically speaking, my profit is going to be $6.86. Okay, great. I buy for 488. I sell the rights. 490. I got $5 plus $1.86. Difference between the purchase price and the sale price. Fair enough. But I got to divide that by the purchase price. Now my purchase price is 488.14. 488.14. That gives me a grand total of, not bad, 1.4% for 5 weeks. Because it expires in 30 days. And 30 days is 5 weeks. It's actually 4 weeks and 2 days, but you can't get 4 weeks and 2 days without getting into 5 weeks. Okay? 5 weeks. So let's divide that by 5. So I'm getting 0.2. 0.2, not 2%, 0.2%. So what is that? That's 2 cents on $1,000. Does that sound like a good deal to you? That's number one. Okay, let's go to number 2. The numbers don't work. Okay, number 2, let's go down here to Yahoo Finance. Yahoo Finance. And put in VOO. Okay, so VOO does pay a dividend, but it's a quarterly dividend. Okay? And look, 131, 153, 137, 143, 147, 167, 149, 158, 149, 180, 154. no consistency with their dividend increases. And they're not always increases. Sometimes they go up, sometimes they go down. Okay, well, let's pick on it a little bit more. We want to look at the summary. Now, this is Yahoo Finance. It's available to anyone for free. It just gives me some interesting information on the company. All right, so here's Vanguard, VOO ETF. All righty, this is the favorite part. This is where I really pick on you. You ready? You're investing your money, okay, at $488 a share, and you're getting, you see that number? 1.39% return on your money. Seriously, what the you thinking? Think about it, okay? An ETF, VOO, okay? They're selling these things like hotcakes. People love them because they lack accountability. You're giving your money to a machine to give you 1.39%. Okay? And I lost half the audience, which is kind of weird. You know, information like that I think would be valuable. Why would I want to invest in VOO? Doesn't have weeklies. The premiums are horrible. Okay? The dividends don't increase consistently. The yield, if I bought it and just held on to it, okay, I'll get 1.39% return on my money per year. I'm showing you a way to do 1% per week, and you think this is a good idea? What the are you thinking? All right, let's look at something else. I think I've always felt like there was a more security with VOO, BTI, Apple, etc. Well, Mark, not necessarily so. Ooh, let's pick on VOO one more time. Let's pull this up again. I want to come over here this time. See this? Ready? Right there. Okay, called holdings. What is actually in VOO? It's an electronically traded fund. A computer trades the funds for you. So let's see what the computer's picking. Take a look. Microsoft, Apple, Nvidia, Amazon, Google, Meta, Google, Berkshire Hathaway, Eli Lilly, AVGO. Why couldn't you do it yourself? Let's take a look at a couple of them. Let's take a look at Apple. Let's take a look at Microsoft. You just do those two, and you can blow away what VOO is doing, which is two of the stocks that you already own inside VOO. Okay, so let's go to MSFT. We all know who that is, Microsoft. Okay, I'm not a big fan of Billy Boy. I think he's got a God complex. All right, Microsoft, 431. I don't like stocks over 250, but I'm just showing you this as an example. So if I bought it at 431 tomorrow morning, I can sell the 432s, 2.25. Okay, get 0.5%, but that's for 2 days. But if I go up for the whole week, I can get 380, closer to 1%. Closer to 1%. Let's find out exactly what it was. So if I do the 431s, so the 430s, that was $1.35. Yeah, let's do the 430s because it's just a numbers equation. If I'm buying it at 41.35, the closest is going to be 430, and 430 is paying 5.15. So let's do the math on this really quick and see what you think. All right, 430s. Yeah, let's do it for this week because we got 2 days left in this week. Now, let's do next week's. Next week, 435.15. 5.15. We want to subtract 135. Subtract 135. Now, why 135? Why 135? Well, if I'm buying it at 431.35 and I'm selling it for 430 next week, I'm losing $1.35. So I want to make sure I pick up that money on the premium. The premium is 5.15. Okay, it's not quite 1%, but let's figure out exactly what it is. Divide that by the purchase price, 430, because we already subtracted the 135. and it gives us 0.88. 0.88 per week. Now let's do a little bit of math. Multiply that. Let's say you don't get 1% per week. Multiply that by 52 weeks in a year. Grand total of 45.9%. Doing just Microsoft on your own. So you combine Microsoft and Apple. Let's throw Apple up there really quick. AAPL. Okay, right now this is at 190.50. The 190s are going for this week, for the next 2 days, 167. So you get $1.16 if you do this week's, which is tomorrow and Friday. If you do next week's, you get $2.15. You subtract the 51 off of there, you get $2. It's a little over 1%. Okay, so you get 1% on Apple. Great. What do I mean? If I could buy it at $190.51, I sell some of the rights to buy it from me at $190. I get $2.51 in premium. That gets to be right away. So what happens if the stock goes up? Well, I make my money, right? What happens if the stock stays the same, doesn't move at all? At 90.51. As long as it stays above 190, I'm out by next Friday. I already made my 1%. Do I care if the stock goes up? No, I don't care. What do I care about? I care about what is it going to do in the next 5 days. That's my main concern. And what's it going to do after that? Okay, after the stock moves, it's either going to move or it's not. Because you can only have one 30-day high. You can only have one 30-day low. So we're talking about Apple here. Apple has the tendency to go. Take a look at the seasonality for Apple. Now, for those of you who don't know what seasonality is, it's how does their stock react from January 1st to December 31st on a yearly basis. This blue line represents the stock movement for this year. Okay, it started out in January, sideways, a little bit of a peak, came back down, sideways, back up again. Okay, 10 years worth of data, that's 2014, 15, 16, 17, 18, 19, so on and so forth. Okay, 10 years of data showing what does the stock do? From January 1st to December 31st, 10 years consecutively. Look at steady growth to the upside. Every single year, year after year. So why isn't Apple in your portfolio? Okay, so that's why I don't like VOO. I don't like any of those ETFs. I like them for a different strategy. Not this one. Definitely not for increasing your wealth. Okay? It's basically people giving up accountability of their own money. Now, no one has more interest in your money than you. It's your money. You work for it. You're either going to take responsibility, do it yourself. Now, this strategy here was created for a 9-year-old little girl. If you're over the age of 18, if a 9-year-old little girl can get it, anyone can. I'd like to think. What time we got? 10:30. One more hour. All right, let's reboot one more time to get one more hour. What chart setup is that? Well, this is your chart, okay, the chart side. This side over here is the underlying information, high, low, open, close, high, all kind of nicey stuff, volume. And underneath that, this is the option chain. Okay, so what we do here, we buy good quality stocks and sell options against them to get a safe, secure, predictable 1% per week. That's the goal, 1% per week. Got all top low 100s. I have no idea what that means. Could you just put more into individual stock? You could, but when I do basically double investing, or investing in the companies individually and investing in VOO. Mark, I just showed you the numbers. Okay, you can do whatever you want. I just tell you why I don't like it. Okay, VOO does not give me a weekly return. Okay, now would I buy it on a weekly basis? No, I wouldn't, because I like predictability. It has a dividend. It pays out a dividend once every 90 days. Okay. Other than that, how does the stock price react to the dividend? Well, it probably goes up. Okay, so I jump in, take the money out, and run. Why do I want to hold on to it? If I hold on to it, it's giving me 1.39% for the year. 1.39% for the year. Why would I do that when I can get more than 1% from Apple by itself? Okay, so if I take what was in that portfolio. I mean, we saw what was in the portfolio. It's not a big secret. I mean, they listed online for everyone to see. Microsoft, Apple, Nvidia, Amazon, Google, Meta, Berkshire Hathaway, Eli Lilly, ABGO. I'm sure they have some more stuff, but that's the main holdings. Okay, so why would you not take a look at the ETFs and find out what's inside the ETF and then buy that yourself? If a machine is picking it out, saying, hey, this is a good stock to buy, well, why don't you just buy it and get a better percentage? Because where do you think the profits go? Okay? You're tying up your money in VOO for a year to gain 1.39%. Make that make sense to me. Okay? I'm making 1% per week, and I've been doing it for over 15 years, so why would I do anything else? Okay, that's just me. What do I know? All right. Like that. Blah, 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 blah. Questions, exactly. Okay, glad you like all that. I was agreeing. All right, cool. What's the difference between top half versus bottom half? I have no idea what he's talking about. Tempo. BP and Infosystem. I like BP because British Petroleum is on my list. Let's take a quick look at British Petroleum. One of the big boys. All right, very first thing I want to look at is what can I buy it for? I can buy it for tomorrow morning, 36.56. The 36.50 is going to be the closest. And there you have it right there. The 36.50 for next Friday is 45 cents. Now, 45 cents is more than 1% of a $37 stock. And if it goes up, well, if you do the 37s, you'll get 22, which is not 1%. But if you do the 36.50s, you are going to get your 1%. Okay? Now, let's take a look at the chart, see if the chart agrees with us. Just because the numbers agree with us. Remember how we do it. First thing I want to see, always, is the calendar. Okay, what stocks am I looking at this week? Now, you guys, check this out. You guys rattle off all this crap every night. Okay, this is what you tell me to take a look at. This was just this week. All right, that's this week. That's last week. I can keep going. Week before. Week before. Okay, you guys have me look at the weirdest stuff. Seriously, you do. But very first thing I want to do is put into a calendar. When are they paying their dividends? There's only 66 trading days in one quarter. You have 4 quarters in the year. First quarter looks exactly the same as the second quarter, which looks exactly the same as the third quarter, which looks exactly the same as the fourth quarter. So each of these companies pays out 4 times a year. So we are currently in the middle of the second quarter. Okay, so if I went back to January, February is the second week of the quarter. May is the second week of the second quarter. Sorry, the second month of the second quarter. Okay, so all this would be basically looking at February. Okay, so February basically looks the exact same thing because it's the exact same stocks every 90 days. So if I buy this one this week, that one next week, that one the next week, that one the next week, I can increase my returns because it's 66 trading days in a quarter. So if you cannot buy Kinder Morgan, okay, make a profit off of Kinder Morgan, buy something else before Kinder Morgan has its next dividend because you like Kinder Morgan, you want to collect their dividend. So you buy it, you collect their dividend. After it hits your target, you get out, and then you buy another one. And then 90 days when it pays it again, you're back and then you buy it again. So you're buying Kinder Morgan 4 times, and you're selling Kinder Morgan 4 times. But you're getting 1% the first time you buy it, you're getting 1% the second time you buy it, 1% the third time you buy it, 1% the fourth time you buy it. So you just took one company, got 4% for the year because you're going to buy it. Well, I'm going to buy it on this day of the quarter. This is the second month of the second quarter, okay, which looks the same as the second month of the first quarter, the same as the second month of the third quarter. So it's the same thing over and over and over again. It's all new to you guys right now, but to me, it's the same thing over and over and over again. It just adds one or two more things to my list of things to do in the morning, because the list of doing things in the morning used to be just myself and my podcast. Now it's me, myself, my podcast, and everybody else who wants to listen to what I'm doing. And the numbers get up there. Okay, so the idea is Do you shoot for the near strike? Roscoe, how you doing? Yes, I do. I look at whatever makes sense. Let's go back here. First thing I look at, the calendar. When do I want to look at the stock? I don't want to look at 3M this week, okay? I want to look at 3M. Oh, crap, look at that. 3M actually has the dividend tomorrow. Imagine that. And then KeyBank after that. But if I wanted 3M, which I did 3M, okay, at the beginning of the first quarter, and I took 3M for 11 weeks. I held 3M for 11 weeks in the first quarter. We're in the second quarter. It's right here. It didn't make the cut this quarter because the numbers just didn't line up. But I will look at it again in the third quarter and see if I want to buy it in the third quarter. But every 90 days, I'll look at 3M. Every 90 days, I'll look at Key. And it just rotates. It's like a revolving door. Neat thing about that is you guys are revolving also. People are coming, people are going. People are learning, people are doing, which is a good thing. Do you have to hold for a certain number of days before the dividend's paid out? Ooh, you're new here. Okay. There's 4 days. Why did you hold 3M for 11 weeks? All right, Beebly Weekly. The reason I held 3M for 3 weeks, let's actually pull it up. When did I first jump into 3M? All right, now, for those of you guys that are new, these are the trades I made this year. Every week I post the trades of the previous week so people can see the numbers for themselves. Okay, so if I pull up one of these, it tells me the time I got in and when I bought it, what kind of a trade it was, buying and selling, the stock, the strike price, the purchase price, blah, blah, blah. All that stuff. All post on there for you guys to follow along in case you don't actually believe me. Okay? Which is, don't believe me. You should do your own research, you know. I'm just showing you what I do. All right? So, CVS, General Motors, Southwest Airlines, Comcast, Ford. Okay, did I mention anything you've never heard of? No, of course not. Let's see if we can find 3M. Week 2, no. Week 3, no. Week 4, did I get 3M week 4? No. Week 5, right here. Week 5, which is the second week of February. Is that funny? Because we're in the, yeah, we would have, remember I said we would have looked at, where is it? Okay, got 3M the second week of February. Second week of February. Okay, this is the second month of the second quarter. 3M is here. 1, 2, which would have been, we would have looked at 3M on the 6th, which is the second week of the second quarter. All right, so let's go back to the second week of the first quarter. Okay, so here it is, 3M. 400 shares at 97, sold the 97 calls, got a little over right around 1%. Target, Key, General Motors, Ford, you've heard of all those. Okay, so that's the first time I got into it, second week. Okay, didn't hit my target, had it here, 6th week, 7th week, week 8, week 9, week 10, and apparently I got rid of it week 10. 3M at 93, 30 cents a share. Yep, it got called out that week. All right, so I didn't have it for 11 weeks. What was that, like 6 or 7 weeks? All right, longer than I want to hold on to it. First thing I want to see, calendar. What am I looking at this week? That's it. I don't want to look at anything else. Only thing I want to look at. What is your plan for trading around Memorial Day? It's just another day, just that the stock market's not open. Is that when you roll over? Well, I take it one day at a time. Now, to me, today's Wednesday. It has no significance whatsoever other than it being Wednesday. Okay? Friday, 3 o'clock is the important time of day. You know, my only important time today at this point in my life is when do I go on TV? When do I go on to show people what to do? That's number one. Number two is when do I do my trading first thing in the morning? That's it. Other than that, I don't do really very much. So, that's what I'm doing. Make sense? Now, we got a couple of people I want to take a look at. Thank you for being here, James. Hey, Michael Dave Robson, back again. You learning something? I hope so. It'd be a defeating purpose if you weren't learning anything. Okay, what are we taking a look at the moment? At the moment, Alibaba. Really? All right, Alibaba. BABABACION in the summertime. All right, ooh, take a look at that. Tomorrow morning I can buy it at 83. The 83s are going for 93 cents. That's over 1% for 2 days. But you gotta like Alibaba, and there's probably a reason for that. Okay, next week's almost 2%. All right, so we like the numbers for Alibaba. Let's see what the charts have to tell us. There you go. That's what it tells us right there. But I'll explain that in a minute. Hold on. Okay, the high of the year, the low of the year. I want to look at 4 things when I see a chart. Anytime I see a chart, what's the high? What's the low? Where was it? Where is it? Did we look at KISS for next week yet? No, Julie, we didn't. We'll take a look at Galanti. Always loading the upward stuff, dude. All right, we'll take a look at that. Hold on. Okay, so 4 things I want to see. Where's the high? Where's the low? Where was it? Where is it? Does it all look okay? Well, at the moment, you're probably saying, what am I looking for? Why is it okay? Well, right now, we're at 82. The low was at 67. The high was at 102. Okay, we're not at the very bottom, and we're not at the very top. I don't like buying at the tops because there's no guarantee it's going to go to a place it's never been. Okay, so if a top is here, well, we investors have seen this company at $100 this year. We've seen it at 90, we've seen it at 98, we've seen it at 97, we've even seen it at 67. But what we haven't seen 40, we haven't seen 200. So it just gives us an idea of what we're looking at. The high, the low, where was it, where is it? All right, so let's go to the 90-day chart. Now, why 90 days? Well, because that was only 3 months ago. Okay, 6 months ago, big difference. Not huge, but big. Okay, last week was a lot closer to this week, a lot closer than 3 months ago. But 3 months ago, let's take a look. High, low, where was it? Where is it? Okay, we see the high right here, drop in 3 days. I wouldn't jump into this until it finds the bottom. Where's the bottom going to be? Well, it's going to be anywhere between here and here. And that's a lot of space. You have run up like this, last 30 days. Let's take a look at the last 30-day run up on this. 30-day chart. First thing, high, low, where was it? Where is it? High, low, where was it? And then, once you get down to the 30 days, you can really see the pattern. Look at, she's going to the upside. Okay, 30 days ago, 30-day bottom. Last week, 30-day high. So what are you going to get after a 30-day high? You can only have one 30-day high. And you can only have one 30-day bottom. So it's at a 30-day high now. Well, there goes your profits. And they're going to continue to sell off until the price stabilizes. But, all right, this is too cheap. What, is it going to be 70, 72, 74, 76? What is it going to be? Well, the market will tell us. Okay, don't get me wrong. I like Alibaba, and I actually own some in a different category, in a different strategy also. But I like it because the numbers work for me in that particular strategy. But here, I would wait until it finds its bottom, wherever that bottom is going to be. Because no matter what chart you look at, a week chart, 30-day chart, 45-day chart, 100-day chart, 300-day chart, 3-year chart, whatever chart you look at, you're going to have one high, one low. That's it. And if you have an opportunity to get from the high to the low, that's when you start looking at it. When it finds its bottom and it starts turning around and start going to the upside, that's what I look for. Now, I don't look at a whole bunch of stocks. Okay, this week I'll only look at 10 stocks. That's it. For me personally. Now, you guys have me looking at a lot of crap. You do, really. And I'll look at it for you. I like telling people when they're wrong. No, seriously. I'm just trying to help people see what's there. Okay, what are you looking at? Does it make, that's my number one concern. Does it make sense? Okay, let's take a look at Kohl's. Oh, so anyway, yeah, I have Alibaba. Even though the numbers do work, the chart doesn't. Okay, but what does it normally do seasonality-wise? What do I mean by that? Well, what does it normally do this time of year? Now, this time of year, we're coming into the summer. Okay, a little bit of peak, beginning of the first quarter. Second quarter is kind of like humpy, not much. Second and third quarter right there. Then you get your fourth quarter. Okay, so from here, from where we are now, way over here, that was my hand, see my hand? Way over here, it's nothing but up for the next couple of weeks. That's historically. That doesn't mean that's what's going to happen. I mean, that's what has happened in the past. All right, let's reboot for the last hour. I'm going to go take a quick break. I'll see you guys back in like 2 minutes. How many people got on YouTube? Got one person here on YouTube. Nobody on Facebook. Nobody loves me on Facebook. Isn't that horrible? Yeah, you got a couple of people over here on Instagram. Instagram's slowly picking up. Very slowly. Howdy, Glorio. And Drazik. How you doing? See you here all the time. All right. Von Hewitt. Dave. J.D. Crosby. Interesting. Cool. I joined. Go. What's that? O.G. Marty. O.G. Marty. Way to go. James. It's tough having a name of James. You know, big reputation to live up to. Old dog is back. Let's see if we can get over 200 people nowadays. Curtis. How's it going there, Mr. Curtis? Oh, missed that one. Arnie, Donald. Oh. Man. I hate when that happens. Everything froze up. All right, so let's see what we got. D-Trap. All right. Dan. 7084. 7084. That's an interesting name. What did you do? What did I do? I just rebooted. Anytime I get down to a certain level, I go after a new audience. I like to keep the numbers up over 100 viewers. Ooh, SC1. How you doing? King Rune. All right, King Rune. All right, so let's get back to what we're doing. All right, we were just looking at Alibaba and letting you know that I do own Alibaba on a different account under a different strategy. But this one here is simple, safe, all that kind of nice, neat, fun stuff. Okay, what do we have next on our list? Next on our list, we have Paramount. Oh, alrighty then. Now, just to let you know, I do own Paramount in several different accounts also. P-A-R-A. Alright, first thing you want to look at, what can I buy it at? $12.18. Okay, the 12s are going for 25 cents. Subtract 18. You're making 7 cents on that. Not quite. What is that? A little over 0.5% for the week. For 2 weeks, you're looking at, wow, close to 3%. Paramount, close to 3% for next week. Check it out. $12.18 what I can buy it for. $12.18. The strike price, 31 May, the end of May, which is not this Friday, but next Friday. Okay? The $12 strike price is going for 48 cents. Yeah, I'm losing 18 cents right at the top, but that price is down to 30 cents. 30 cents on a $12 stock. That's just under 3%. A little over 2.5%. Somewhere there. Okay, 2.5%. But it's Paramount. Come on, you guys have seen Paramount movies before. They've been in business for over 100 years also. Let's take a look at the chart and see if we like those numbers. First thing I want to look at is the high, 1750. That was back in December. The low was a couple of weeks ago. It was like 1030. All right. The last 90 days, which is what, the last three months. Okay, first thing I want to see, very first thing, the high, right around the what is that, the 4th of May. And the bottom, what was that, 1450? The bottom is around 1030, around the 9th of April. So April, first week of April, second week of April, we have our bottom. The first week of May, we have our top. All right, so last 30 days. All right, first thing I want to see, last 30 days, check it out. Is my 30-day high on the 5th, 30-day bottom on the 2nd. Goes from the 2nd, all right, May 2nd, to May 5th is the high. Now from there, she drops, finds this bottom right there, 2 days to the upside, perfect opportunity to get in. If I had any money, well, I might invest. I invest all my money on Mondays and Tuesdays. After that, the rest of the week I have nothing. Nothing until Friday. Okay, Friday comes along, this is what we're looking at. Buy first thing tomorrow morning, 12.18. Sell off the 12s. Okay, so I get 0.5% this week. For next week, I get a little under 3% for next week. That's with Paramount. What does this stock normally do this time of year? She's coming off of a 30-day bottom, 30-day high. The bottom was 3 days ago. Okay, so what are these numbers right here? Monday's bottom was 1190. Okay, Tuesday's was 1190, and today's was 1192. Huh. So it kind of looks almost even. Tuesday, Monday and Tuesday, the highs and the lows. Interesting. Just inversed. Because Monday was a down day, Tuesday was an up day. But you get your 2 up days in a row. 1, 2. Okay, what does this normally do this time of year? Normally this time of year, here we are right here for the next 2 weeks. Next 2 weeks is basically going to go sideways. All right, so that's Paramount. I like Paramount, and I do own some Paramount. All right, next on my list. Hey, Charlie, how you doing tonight? Paul's here. Wow. Fedor Dostoevsky. Dostoevsky. Fedor Dostoevsky. Interesting. Charlie, just learning. All right, so that was an ICT. I never heard of ICT. But we're going to get to Nike next. Gallant, I know you're waiting for that one. Well, come on. ICT. All right, so ICT is a quick no. Doesn't have options, can't even find it. Nike's next, NKE. Here you go, Gallant. Nike, 92.57, the 92s. Ooh, take 57 cents off that, you'll get 30, that's 1/3, that's not worth it. The 92s, take 57 off, yep, you get your 1% at the 92. I like the 92. I said 92.57. The stock just has to stay above 92, and I'll still get my 1%. It's already 57 cents above 92. So that's a nice safe trade. I like a safe trade like that. It's just got to stay above 92 by next Friday, and you get 1%. I got out because computer auto trading. Yep, so did I. All right. What's up with G-Wave? Yeah, G-Wave's been a no ever since I started it. What software? Charlie, that's Thinkorswim. Just learning. Thinkorswim by Charles Schwab. It's not by Charles Schwab. Tom Sosnes came up with it decades ago. They just bought it. Okay, I got out Blackacre Esquire, Thinkorswim. All right. I got out because computer auto trading. Okay, yeah, I got out too. I do my own personal trading. I don't trust computers whatsoever. I missed a couple questions. Hold on. G-Wave is a no. Sorry. Can you teach me how to do do I buy and sell in MetaTrade 5? It is confusing if you have any information. Alright, MetaTrade 5, I've never heard of it before. I like plain and simple. Call a broker, one that you know of, one that you heard of. Go to your bank, go to a financial advisor, someone you trust. Hey, this is Charles Schwab. Charles Schwab has been around for over 100 years. And Charles Schwab bought TD Ameritrade. TD Ameritrade got bought by Charles Schwab. So this is Thinkorswim. Thinkorswim used to be an entity in and of itself, but they got bought out by TD Ameritrade last year or the year before or a few years ago. I don't even remember when. But then Charles Schwab bought TD Ameritrade. So now this is available for free on Charles Schwab. Maybe you should go to the thinkorswim.com. Just download it onto your computer. Thoughts on Walmart? Walmart. Oh, wait a minute. Sorry, we're looking at Nike first. Then we'll take a look at Walmart. 9257, we already figured out it's already 1%. Okay, first thing I want to see, I want to look at the chart. Very first thing, high, low, where was it? Where is it? Let's open this up so we can see it better. Alright, open it up so we can see it better. The high in December, the bottom, October, and then challenge it again back here in April. October and April, pretty close to the bottom. Okay, so yeah, we have seen 88 back in October, and we see it again in April. Now it's on an uprise, it's at 92. Okay, great. Now I want to take a look at the last 90 days. What does that look like? Remember, very first thing. High, low, where was it? Where is it? Okay, so the high was the end of February. Drops, gonna get a gap down. This gap hasn't been filled yet, so keep your eye on this gap because that's going to fill eventually. Okay, it tried it over here in April, but didn't quite make it all the way. Okay, so the bottom was right here in April. 1, 2, 3, 4 days in a row, just about. All right, here are these numbers right here. 88.89, 88.80, 88.80, 88.77. Okay, that's pretty much the bottom, right there, 88.80, 88.77, pretty much the bottom. She goes up, pulls back, up, pulls back, up, pulls back, and we're right here right now, towards the uptrend. It's a very slow uptrend, but you have this gap right here between the 96, between the 96 and the 98. Not a huge gap, but it's a gap is a gap. Gaps have a tendency to fill. Okay. Last 30 days. A little different of a picture the last 30 days. 30 days ago was your high, your bottom was 3 weeks ago. She goes up, pulls back, up, pulls back, up, pulls back to the upside. How long is it going to go up? Okay, it is major trending to the downside. Okay, from here going down, but from here it's going up. All depending on how you want to look at it. Now, what do I want to see? Well, I want to see by looking at this, where's it going to be the next 5 days? And then the next question is, do I like Nike? Now, this right here doesn't give me a clear vision of what it's going to look like. Sometimes it's clear as day. Sometimes it's not. This is not clear as day. Okay, she goes up, that's clear as day. She goes down, clear as day. Up again, clear as day. Comes down. Here's where it gets foggy. Okay, the last 2 weeks. So something's going to happen. It's going to either shoot up or it's going to drop down again. Okay, there's way too much confusion, as Jimi Hendrix says. There's way too much confusion. Oh, 49, come on. We're about ready to be done tonight anyway. The shoulder's getting to me. All right, that being said, that's Nike. I think I'm boring people, but boring people keep leaving. Uh-oh, down to 46. Thoughts on Walmart? Let's do Walmart real quick. WMA. Walmart's going to be a no. Yeah, I didn't get very far. 65.28, the 66s go for 9 cents. Next week, 66s go for 25 cents. The numbers just don't work for Walmart this week or next week. But look at this over here. Okay? That's the high of the year. Okay, so no, Walmart's not a contender for this opportunity this week. Mara, we haven't looked at Mara in a while. I got out because of computer auto trading. Yep. Okay. EL, Estee Lauder's next. Now, just to let you know, I did buy some Estee Lauder this week. Why? Well, the numbers work. Everything looked good. It's actually that simple. Sorry, it glitched. Do you have... Alright. Thank you. I will download it. Charles Schwab. I have to spell it correct. It's Think or Swim. That is Think or Swim. Charles Schwab. You have to have an account at Charles Schwab in order to be able to use Think or Swim. Now, currency, that I couldn't tell you. Wait a minute. Yep, right there, Forex. There you go. That's Forex also. I don't do Forex because I have to sit there and look at it all the time. That doesn't throw me. Okay, so as I was saying, Estee Lauder, I jumped in some Estee Lauder this week. 133. The 133s are going for 50 cents. That's horrible. Next week's 133s. I did get my 1% when I jumped in this morning. It's not offering it at the moment. Look at the chart. Very first thing I always want to check out is where's the high, where's the low, where was it, where is it? Which direction is it flowing? It's flowing in this direction, which is a good place because it's been there before. Bottom's way back here in November. The high was back in last June, over 200 bucks, and below right on 100 bucks. So look, from 100 bucks to 200 bucks within a year, and that's where it is now. It's at 130. Okay, so let's look at the last 90 days. Okay, first thing I want to look at, the high right here back in mid-March. The bottom right here, end of April, beginning of May. Okay, last 30 days. 30 days ago was the 30-day high. She drops on the 1st of May, up a little bit, down a little bit, up a little bit, down a little bit. And here's where we are now. Okay, which direction is she going? At 130, the bottom's at 124, but look where the top is, 150. Better off going into the top direction. But are you getting your money out of it? I got mine. All right, how many trades can I do in Charles Schwab? I must admit, I'm not boring at all to people who really do this. Oh, Michael, thank you for that. Ooh, BNED, really? BNED. Why is it I've never heard of them? BNED. Barnes and Noble. Please tell me you haven't been holding up to Barnes and Noble for all this time. Seriously? Nobody does books anymore. And I know people who love books hate hearing that. Go on, CSX, huh? CSX. Interesting. 34s. Oh, for this week, I still get a halfway decent. That's a halfway decent premium for 2 days. Okay, 34.01, selling the 34s, 25 cents. Okay, it's not bad. Next week's 34s are going for 1%, so you get the 1% out of CEX. Oh, CSX, sorry. Well, let's take a look at the charts. First thing I want to see, where's the high? Back in late February. The bottom, late October. Okay, a year ago, she's at 32. Now she's at 34. That's like ideal. Got your high, your low. Where was it? Where is it? Right there. Last 90 days. 90 days ago was the 90-day high. Just above 40 bucks. Okay, a couple of weeks ago, she dropped down below 33. They go to the downside.
I love it when a good company goes to the downside. Why? Well, because I like buying it as it's turning from the bottom.
Because as you can see, she goes down, she goes up, she goes down, she goes up, she goes down, she goes up. That's all they do. Down they go. You have to catch them at the right place. The last 30 days. Now,
It's not as if I struggle and look at stocks all day long. I don't. Okay, when I say the 10-minute trade, I mean the 10-minute trade.
when I look at stocks, the only thing I'm looking at is what is on the list for this week. Okay, week 22, we're right here. What's on the list this week? Johnson & Johnson, Walgreens, Aflac, 3M, and KeyBank.
Those are the only ones I look at on a daily basis. I wake up in the morning.
This week, that's all I look at. Why would I look at any of the other ones? And why am I looking at Walmart?
Walmart had its dividend at the beginning of the month, so why am I looking at it now or at the end of the month? Well, somebody asked me to. I won't look at Walmart again for another 10 weeks. There's 13 weeks in a quarter. Okay, we're in week number, I think, 9 or 10. Week number 9 or 10 of the quarter. There's only 13 weeks. Okay, after that, we start over again.
Okay, so let's go back to where I was. What was I talking about? I burble too much. Like that, I burble too much. Okay, first thing I want to look at, what are they paying out their dividend? That's what I want to look. After that, I want to check out the numbers. What do the numbers look like? Well, the main number, the most important number, two. What can I buy it at? What can I sell it for? Okay. 34.01, 34s are going for 35 cents. I'm getting 1%, exactly 1% to hold on to that till next Friday.
So the question is,
Do I like it?
okay,
Well, the chart tells me 30 days ago, we're at 34.60. We got our 30-day high at 34.97. Our 30-day bottom was on May 1st, and that was 32.96. Okay, she goes up, finds a little bit of resistance, drops back down, a new bottom, and look at this. Okay, I wouldn't have jumped in there. I'm not going to say that I would have jumped in here because I like 2 days to the upside. Here is just one. Now, this is a huge day to the upside, and that kind of makes me unhappy. Why? Well, I would prefer 2 small up days and then have a big up day. But it is what it is. Okay, but we have quite ways to go to challenge that 30-day high.
because it can only be one 30-day high, and only one 30-day low. EL, we already did EL. Okay, Gallant, we did EL a couple of seconds ago. I told you that I bought some. Estee Lauder this week. I'm thinking to myself, today's Wednesday, we have 2 days to the end of the week. And I'm thinking, what the hell did I do today? Isn't that weird? I have no idea what I was doing. Ivor Khan, how are you doing today? Over here on Facebook, Ivor Khan's here. Alright, so CXS, LAD, we already looked at EL, Estee Lauder. We already looked at Estee Lauder. So we'll look at GILD. Alright?
GILD. GILD. Gilead. Alright, 67.66. We'd be looking at 68s. Alright, for this week is about 0.5%. Next week it's over 1%. We really get 2 days left, so you gotta cut this week some slack. 2 days left, the most you're gonna collect is 0.5%. Okay, fine, 0.5% for 2 days is not that bad. Or you can go for next week, you'll get a little over 1% if you go for next week, next Friday. So what does the chart look like? Remember, first thing I want to see, the high, the low, where was it, where is it? What's the pattern? Sideways, up, bottomed out. Okay, high of the year back in January, bottom of the year in May. Okay, let's look at the last 90 days. Okay, last 90 days. Top was around 311, our bottom was around 5.6, and now we're sitting over here at 67.80. You see the trend? Here's the bottom right here. 2 days to the upside, and then you jump in. That's my humble opinion. That's what I do. I'm not telling you guys to do that. I'm just saying this is what I do. All right. This is the last one we're going to do for tonight. And we'll pick it up again tomorrow night. Tomorrow's Thursday night. Not a heck of what happens on Wednesdays and Thursdays. Sorry. Okay, so like I say, 66, 67, 66. The 67's going for $1.32 for next week. That's over 1%. Closer to 2% actually. No, not really. But 68's over 1%. Last 30 days. Last 30 days, everything changes by changing the dynamics of the chart. We were looking at 90 days, which is 3 months. And now we're looking at just 1 month. Okay, a month ago she's at 67. She drops to have a double bottom at, what is that, 64? Got the bottom at 64.40, 64.35 was the bottom. 30-day top was 68.37. Now she's going sideways. Again, there's no rhyme or reason to this one. There's no, this is going down because she's going sideways at the moment. Down is going to this way. It's not going either up or down. So it's kind of a little fickle. I wouldn't know what to do with that one. And we're under 50, so that's it. I'm done. All right. I'll catch you guys again tomorrow night. See if we can get more than 50 people on. That's ridiculous. Ridiculous. Investing in dividend stocks for weekly cash flow for a safe, secure, predictable 1% per week. Gotta say goodbye to you guys here.